Hello dear traders, happy Sunday. It's time for my weekly summary of the MK block. So let's go through at least some of the examples and markets of this week. Let's start with Kiwi. So looking at the 4-hour chart as I posted it on April 21st. So you see some really nice 4-hour reversals there we had recently. And then you see the longies dominating, okay, more dumb money buyers trying to buy into Kiwi cheaply, leading to failed reversals down, yeah. Note how the squeeze line expands, that's why I drew this line. And as expected, Kiwi came down further, yeah. If dumb money comes into the market and insists on one direction, like here all the dumb money longies, what happens is it gets pushed down further by the smart money algos, as we have seen many times. And you can see that with the expanding slope of the squeeze line, yeah, the green squeeze line. So as I wrote, Kiwi came all the way down as expected, power of the squeeze mode. The money longies came in and the smart money did several failed reversals down, taking out the lows. Okay. Alright, so euro dollar, let's start 17th of April. First of all, note how all these nice option signals here, the options, the option strike targets got filled with this move. Yeah, 1, 2, 3, 4. Where the situation where then a collapse in the squeeze, so the market came off and used this collapse in order to fill the signals. So this shows you that dumb money shorties left the market, the sellers left the market, and therefore the smart money algos allowed the market to normalize and use that opportunity to fill those option strike targets and the order gap zones. Yeah. So we had a situation on the 17th where we had the 230 news, and they used the opportunity to fill also on the 1-hour chart, like you can see here. Then on the 18th, you can see euro dollar was very neutral. And look, this is what I wrote here. Euro dollar is neutral. It could form some consolidation zone between the position bar nests, okay? And I'm quite proud of this. So you can see that I'm also able to predict when the market will be consolidating based on the market causality. It's not difficult. You can do it too. Look, on the 18th at 326. Above the price, we have dumb money longies, okay, a green nest. And below the price, we have dumb money shorties, so the red nest. So the smart money has no incentive to let either of the two win. You understand? So I said consolidation, and guess what? Look at that. 19th, consolidation as expected. 21st, look at that, consolidation as expected. How nice is that? Okay. Here, look, exactly like I did the box. The market consolidated. So here you can do range scalping, for example, yeah? Trade back towards the range. The prediction of a consolidation zone in euro dollar was correct, but today the US news can lead to a breakout or house clean, low tradability. So what happened is then, you know, look at that. They used the news even to respect this consolidation by pushing the price of euro dollar down again into the zone. So that's powerful, isn't it? Okay, but if you understand the causality, it's not difficult to predict these kind of things. Okay, cable, very interesting. First of all, note these beautiful moves on the lower time frames. Okay, filled the option strike, filled the medium term stop, filled the order gap zone, filled the MTS and order gap zone, filled the option strike. Okay, boom, boom, boom. These are all good trades. All good trades you can do, yeah. And then I said, look, we have MTS above the price, that's a target. Pound dollar doing a pullback, maybe once the 1-hour inner range medium term stop. However, if no dumb money short is coming in, it can go down towards the low again. So I said, boom, pullback up towards this target on the 1-hour chart. And guess what? Boom, this happened. Okay. So nice prediction. Then cable became a bit more complex. So it took the upper target as expected here on the 19th. You see it nicely. And look at that. Slightly overshot and then again down. That's how precise this can be. Yeah? But then we had so the news. And look, that I said slightly bearish, which was again a good prediction on the 21st at 3:05. Because look at that. Long is above the price, you see? So it also consolidated a bit like euro dollar, but above the price we have these longies and some new longies. You can see also the upward sloping squeeze line. So I said bearish. And indeed we see on the low time frames, so after took the upper target, down move towards the lower target. Okay. All right, euro pound. So here on the 17th, at the beginning of the week, we see 1, 2, 3, 4 nice option targets filled. When the squeeze line collapsed, boom, they took all these targets. Yeah. And even the other ones, you see, the next day on the 18th, you see, boom, boom, filled. How powerful is that? You see, when you combine all these things, we know this is, why the price moves as it does. Okay, it's the dumb money positions, the dumb money stops, the short-term, medium-term, long-term stops. It's important whether overall, one side of the dumb money is dominating via a squeeze. It's important where we are on the 4-hour chart in terms of the range. And it's important, where the medium-term stops, the order gap zones are. If you understand all of that and you're able to do this analysis on different time frames, you can predict a lot of moves, because that's why the market moves. Guess what? And when the bias is low, of course, don't place trades. Only if the bias is high and you're very confident. Yeah, you want to reach a high strike rate. So look at that. It even took the next one. You see, boom, on the 19th. Okay, these moves are not random. Now you see really well also why they do these normalization moves. And then on the 21st, after it filled all those targets, look at that. What happens? Boom. Order gap zone and inner range medium term stop. So boom. They also filled that one and then the upper one. Everything filled, everything kicked out. How powerful is that? Okay. Australian dollar. So on the 18th, it took this inner range medium term stop at 237. The shorties. And on the 21st, I did this here. So you see we had some beautiful 4-hour reversals in Australian dollar. Look at this. Boom. Up, down, up, down. And look at this. Okay, down money switch, boom. Down money switch, boom. Down money switch, boom. Down money switch. That's why these 4 reversals worked. Okay, collapse in the squeeze line. They come nicely. Now slightly bearish like the other ones. Okay, the more complex ones, dollar yen. So the 18th, look, of course you can see, look on the forward chart on the 18th. They took the highs, they retested the upper 4-hour band. So it normally would do a 4 reversal. However, in this case, we had some shorties on the way and also a squeeze. So that's where it's dangerous. We want to see a collapse. We want to see the red squeeze line having a negative slope, pointing downwards, pointing at shorties getting kicked out or leaving, so that we can do a normalization trade. All right. So I wrote dollar yen is complex, wants to do a 4 reversal. However, there is a squeeze line. There's a squeeze against the dominant shorties going on. Without a collapse in this red squeeze line, no short trade. Okay. You have to be selective. But what happened then is eventually we had the collapse. You see, the squeeze line collapsed. Down money switch, longest came in, and that was a point in time where after the retest, you had a tradable 4-hour reversal move down towards the range. Beautiful move. Yeah. Congrats if you caught it. Okay, some honorable mentions. So dollar cut. We had this massive down move of the last weeks, which we predicted. Then once it took the lower band, we had a collapse in the squeeze line. Down money switch. Shorties came in when after the longies left, and then a nice 4-hour reversal up as a normalization towards the high. Okay. More advanced trade, but it's in a market which is very overstretched. So cheap entry for any causality trader. Euro yen, we see Euro yen did some beautiful moves on lower time frames. Look at that. Okay, option strike filled, order gap zone filled, MTS filled. Okay, but it was more advanced and complex because overall we still had an ongoing squeeze against the shorties. But of course you can say, you know what, I only take the long trades against the shorties. Yeah, I skip the short trades like this one. Yeah, there are different ways to play it, as we know. Gold, rather complex. After it took the high, it normalized, okay, and moved around the lower 4-hour range. Also, Bitcoin did a pullback down because we had only the longies dominating, no shorties. But at least it broke the long-term consolidation, but then went for the lower lows again. Pound, Aussie completely neutral in the middle of the range. Okay, this is a range mode. Silver filled all 3 option strike targets there. Okay, and then moved back up because some shorties came in towards the upper targets. And pound yen also did some nice runs. Good. Euro Aussie, there could be a 4 reversal, but it needs to come a little bit lower. So we watch that one. So yeah, some good opportunities there this week. You can see every week we get some good opportunities. Some weeks are really easy, some are more complex. This week I would say somewhere in the middle. You know, we had some very cool moves, but also some more complex scenarios. What happens is if the main pairs, such as euro dollar, are in a more complex mode, like here in a consolidation, that affects normally the other pairs as well. Okay, but as you can see, nothing is random on Forex, okay? You need to understand where are we on the fall chart. Also the day chart, are the moving average targets nearby? But then what's happening? How do I evaluate the latest money flow in terms of the overall allocation? Where are, you know, like the targets, the stops, the order gap zones, option signals, etc. Where are the targets? And then everything quickly makes sense, and you will be able to find some extremely good trades. And, you know, it doesn't take very long to, you know, understand the market that way and then to achieve a high strike rate in terms of your trades. This is super unique. I'm very happy of that, you know, like this is so powerful. I'm very proud that, you know, I'm able to show you everything this way. And thank you for your feedback also. I get very nice messages. Thank you, that motivates me. And many people say once you have understood the causality, there's really no way back. This is the closest we get to any holy grail, and you know, once you master the causality, you only need to focus on your execution. Yeah, follow your risk management plan, however it is, whether it's with stops or with hedging or with scaling or in whatever way you prefer to trade. Have a precise risk management plan, follow it, have a good psychology and mindset, have your emotions under control, and then just concentrate on executing well. Have the patience and discipline to wait for those setups and to evaluate them correctly. Protect your downside, and that's it. Okay, you get a good number of setups every week across the markets. Yes, that's all you need. Just wait for them to unfold in front of your eyes. Watch the MK web, and then when you see it and you have confidence, go for the trade. Okay, pick the right lot size for your strategy. Protect yourself. If the trade comes nicely, sometimes do not just take profit too early. Okay, sometimes it makes sense to take partial profit and to protect it and let it run. Sometimes, you know, you may say, you know what, I have different money flow, I'd rather take the profit. But sometimes also you need to, you know, try to ride the thing much longer. Yeah, sometimes all the way to the other 4-hour band, for example. Yes, nice one. Let's rock next week. All the best, my dear traders.